Hi, we're here at ArabNet with Tanvir Shah, the Managing Director of the Partnerships. Can you please tell us about what the Partnerships is and what you do?
Yeah, sure. The partnership is a consulting firm based out of Dubai, and we have three primary areas. One is financial services, where we advise large banks on retail banking services across the board. So risk profiling, cost optimization, product development, customer acquisition. Second is real estate finance, where we advise developers on raising equity and debt for projects across the region. And the third is SMEs and startups, where we help largely FinTech startups partner with banks, negotiate with central banks, have a customer proposition, go-to-market strategy for regional expansion.
Okay. What are you doing here at ArabNet? What are your objectives today?
One of our key objectives was to meet FinTech specialists from the ecosystem to understand what's happening across the region. And it's been a delightful 2 days learning about the latest developments in the financial technology world.
Okay, can you share some of those insights or the highlights of the conference for yourself in the fintech space?
So very happy to note that both DIFC and ADGM here in the UAE have fintech hives or fintech regulatory sandbox that they've created. Similar work happening in Saudi as well. SAMA is very active on financial technology, regulating it, allowing it to grow, however still keeping the trust and reputation that goes with any financial service. Remember, we're dealing with the resources of society when we're talking of banking, and trust, respect, longevity of that institution that guards people's money is a key pillar of society. And that's where the central bank regulators having the balance between allowing startups and these technology geniuses to explore within the framework of what trust the society demands from the guardians of wealth.
Okay, so you think we need large organizations to use that infrastructure that's laid in place already for security purposes?
Yes, you're definitely right. For two reasons. One is pure play security, so that the money doesn't get lost or stolen. The old school banking, which is where the bank or the house of wealth or the house of money guards the resources of that town or that village. Second is, if you look at it from a more modern perspective, is risk profiling, to ensure that the right resources are distributed to the right segments of society or the right businesses. There is a lot of credit scoring that goes in when you're lending to millions of customers. There is a large collection division, because from those millions of customers there will be many who will default. Managing those default rates, managing collections is a key component of lending. It's a key component of even accepting deposits. A simple example, what happens to a deposit when someone dies is a specialist compliance section. So for a fintech, if they were in any way accepting money or being a house of money, even for a short time, so even for 10 minutes, if I am the recipient of 1,000 dirhams, and within that 10 minutes, if that person is dead, or if the recipient is dead, what do I do with that 1,000 dirhams that's in my pocket if I'm the fintech, if it's in my account? So as long as fintechs are a platform enabling people who are trusted, so that's the large banks largely.
Right.
Banks that are regulated, banks that have a capital base, that have departments that look after these challenges, compliance, regulation. These are for the safeguard and safety of society. And I believe that the large banks have done some really good work in ensuring that banking and wealth management remains a longevity, sustainable play. Fintechs can augment how those processes are managed, how the customer interface happens. Blockchain similarly is an enabling technology. Blockchain is just how you manage a register of information in different locations rather than one location. The cool name for it is blockchain. What Visa and MasterCard have been doing for almost half a century is actually, now the cool name for it is FinTech. Visa and MasterCard are the real play FinTech. I was just giving an example to someone here at the conference, and you mentioned how the conference changed perceptions. Is one of the things we shared is, today you, being based in Dubai, take a flight to Argentina. You go to a shop that doesn't know you. You swipe literally a piece of plastic. and you walk away with $10,000 of goods. No one asks you anything. All you did, you walked in, you swiped a plastic, and you walked out with $10,000. Now that is real fintech. That's fintech in action. That's financial technology, enabling payments.
I know some people would argue that the future of fintech is obviously blockchain technology, but they don't see large banks in that space in the future.
They're right.
Okay.
Because the banks shouldn't be doing it. Very similar to any security. Most banks don't operate security vans. The money that comes into ATMs, it's from a contract with a security firm. A firm that specializes in security of physical cash is a separate entity than a bank.
Okay. So who are the biggest players in fintech today?
First, I would say Visa and MasterCard.
Okay.
By a far margin. MasterCard has MasterCard Labs. They're innovating. They're coming up with new technologies around how payments could be made easier.
Okay, like the fingerprint card.
All of it, including blockchain. There are
Okay.
people at these organizations that are looking at blockchain. Dubai government is a large player. Beam is one of the large operators here. Of course, Rev, when I mentioned our experience with FinTech was with when I was advising Abu Dhabi Islamic Bank, and we launched a multi-currency payment card with an Austin, Texas-based company called Rev, and their Dubai operations is now enabling FinTech at Al Ansari Exchange, Al Fardan Exchange, and Etihad Airways. Their multi-currency payment cards are backed or backbone, financial backbone is Abu Dhabi Islamic Bank, the bank I was advising. It's regulated by the UAE Central Bank and approved by the UAE Central Bank. It's a Visa product. So there's Visa, there's the UAE Central Bank, there's Abu Dhabi Islamic Bank, there's Rev, and there's Al Fardan Exchange, Al Ansar Exchange, and Etihad. Distributor, the financial backbone, the regulator, and the fintech.
Okay.
So Rev is doing great work, Beam is doing great work. I believe Beehive is doing really good work as well in the lending or peer-to-peer lending.
Yeah. So with peer-to-peer lending, blockchain, and other technologies in the financial industry space, do you think we need to ramp up the data security at this stage?
If they want to do everything themselves, they really need to ramp it up. If they partner with the large old stodgy banks,
Other infrastructures,
and use their infrastructure, so you raised a very good point. It's called the PCI DSS.
Okay.
It's called Payment Card Industry Data Security Standards. They've been existed for decades. Every bank payment or card specialist will know about PCI DSS. But you ask fintechs about PCI DSS, they usually haven't even heard the term. Anyone who's talking fintech, the first thing you should probably ask them is, have you heard of PCI DSS?
Okay.
It's Payment Card Industry Data Security Standards. If you were launching a Visa, MasterCard business today, even a small cooperative bank, you have to be PCI DSS compliant. If you're launching a loyalty program that would run on a bank's card, credit card or debit card, your data warehouse has to be PCI DSS compliant. PCI DSS compliance also includes stuff like, is there leakage from the pipe? Because leakage can spoil a data warehouse. Who can come in and out? So these data warehouses that house all the loyalty data, financial data of any bank, even a small bank, are all regulated by PCI DSS. These standards were formed in the 90s by MasterCard, Visa, Europay working together. That's the reason your plastic today is very secure. And people who are doing apps, so if you're a fintech that just does apps, that is the front label for a bank, you don't really keep data. So data risk is one of the areas that we advise on as well, is how do you ensure that someone who's sharing your data with you will not get compromised tomorrow? And that is where the banks come in. That's where the Visa, MasterCard come in. These standards already exist.
Okay.
And fintechs need to play by these rules and then help accelerate those rules, help adapt those rules for blockchain. Because blockchain, as we said, is ledgers in different places. So that does not fully covered by PCI DSS right now. But this year or the next year, we could have PCI DSS blockchain specific detailed standards. And that's where data will be secure.
Okay. What is your take on cryptocurrency such as Bitcoin?
I do not comment on that.
No comments on that?
No comment. It's an interesting space.
You can't imagine a world without physical money where everyone is using Bitcoin.
I can. And I think it'll come in some form. Whether physical cash stored in the treasuries will disappear or not is the second question. But physical cash in society might disappear. So today what you think of as physical cash is not really or digital cash is not really purely digital. It's just your transaction with me is digital. But at the back end, someone in treasury actually has to move money. There's an interbank monetary movement of debits and credits at the sort of national level with the central bank, that if you use the National Bank of Abu Dhabi card to swipe at my company, then your bank debits you and credits my bank that credits me.
Yeah.
Somewhere between your bank and my bank, at the end of the day, money has to move. And physical money gets moved on a daily basis. The society, the customer doesn't see it. So I do see a definite possibility of pure digital currency at some point. I don't feel that, what we've been speaking about, reputation, trust, has been displayed to the extent required by society by Bitcoin at this stage.
Okay. So you think technologies in the fintech space, such as blockchain, are there to facilitate transactions in the given infrastructure, which is secure and has been around for a very long time? Okay, great. What else are you looking forward to at ArabNet?
I'm looking forward to have a little more conversation with the regulators. I've had a couple chats with BIFC and ADGM and SAMA. Lebanon, the central bank has now funded $400 million into VC space with their circular 311. I'm looking to understand how regulators are drawing the balance between new age and old age. And our premise is that balance is essential. New age, I do not believe, will completely upend old age in the next decade. Old age, large banks are here to stay. Their size may shrink. Their way of doing business will dramatically change. How they're augmented by new tech will be a very interesting space to see. And that's one of the reasons our company is called the partnerships, is we believe if you partner together the best of both these under a regulatory framework that safeguards society, we can have a robust, accelerated growth of fintech startups.
Great. Thank you so much for coming and
Thank
for
you,
joining
Alex.
us. Thank you.
Cheers.